Hey, what's up, my friend? In today's video, we're going to be talking all about breakouts, alright? So breakout is my favorite type of entry when trading the markets. And it's for two reasons. Number one, when you're trading breakout, it is very easy to know when you're wrong, right? For example, price breaks out higher out of the range, and then poof, it goes back into the range, and you know it's a false breakout, and you can just easily cut the trade. And the second reason is that when you're trading breakouts, you're trading momentum at the back of your trade. So sometimes the trade can just, go in your favor and with little to no retracement. And all you need to do is just trail a stop loss, and who knows, you could catch a big trend. So this is the two reasons why I love trading breakouts. And now I get, quite a bit of feedback from traders, right, where they say, Rainer, whenever I trade breakouts, I tend to be, getting a lot of false breakout. Is there a way to avoid it? And if you think about this, right, if you want to avoid false breakout totally, it's like saying, is there a way to trade the markets with zero losses? No, right? When trading, losses are just, the cost of doing business. And same for breakouts, right? When you're trading breakouts, false breakout is something that you have to deal with. But that's it, right? In today's video, I'm going to share with you practical trading tips, right? On when is the worst time to be trading breakouts and when is the best time to be trading breakouts. So all this and more in today's video. I'll see you there. Okie dokie. So first up, let's talk about basics, right? What is a breakout? So a breakout is, for me, I classify it in two ways. Number one, a breakout of swing high or swing low, or a breakout of support or resistance. So let me explain, right? A breakout of a swing high or swing low looks something like this. In the markets, there are swings in the market. And how I define swing high and lows is like this. For example, this is a swing low in the market, then price traded lower. Another swing low, price broke below the swing low. This is another swing low, and price traded below the swing low. Another swing low here, and price traded below the swing low. So the swing low is like so-called, a mini version of support and resistance. They are not as significant, but it's pretty obvious on the charts when you identify a swing high or lows in the market. So in this example, this is a swing high, then price traded above the swing high. Another swing high here, price traded above it. So yeah, right. Trading breakouts, you can either trade the break of the swing high or swing lows, or you can trade the break of support or resistance, which is something more like this. So resistance in the market is an area where there will be potential sellers coming in. So in this chart, this is an area of resistance, right? Price tested once, tested twice, and this was actually, an area of resistance, and then price break and close above it. So this is a breakout of resistance, right? A slightly different from a breakout of a swing high, because a resistance is a much more respectable area, and it's obvious on your charts when you have identified key areas of support and resistance. So there are two ways to go about it: a breakout of the swing high, swing low, or the breakout of support resistance. So now let's talk about when you should avoid trading breakouts, right? First thing first, you don't want to be trading breakout against the trend, and you don't want to be trading breakout when the market is far from structure. Let me explain. Trading against the trend is, I would say, it's quite logical that you don't want to do this, right? Because if the trend is basically, your friend, right? You've heard the saying, right? The trend is your friend till it bends. So let's see why the trend is actually, puts you in a much more favorable position. Because think about this. You notice that there is a downtrend right here, right? You see this series of lower highs, lower highs, lower highs, lower highs. So when you are trading with the trend, this means that in this example, you are preferably looking to get short. And if you are looking to get short, you can see that the move towards the downside is much more sustained, right? Look at this downside movement here, this downside movement, this downside movement, this downside movement, right? They are pretty much stronger and last longer. Whereas compared to someone who wants to trade against the trend, right? Where they're looking to get long. Look at the long traders who are going long in these markets. Look at the kind of move that result from it, right? This is the up move, right? Very short, very limited. This is the up move, this is the up move, and this is the limited up move over here, right? Let's consider this as, one move. So you can see that the strength by the bulls is very weak compared to the bears. So if you are looking to trade against the trend, then you can see that there is really not much so-called meat in the move, right? Your gains are pretty much limited because you are trading against the trend. So likewise, if you want to trade breakouts, I would strongly discourage you, right? Or strongly advise you not to trade against the trend, right? Because for example, you see over here, there's the area of resistance, and let's say you're looking to trade the breakout higher, right? I would say chances are this breakout isn't really going to go very far, because after all, you're trading against the trend. What is likely to happen is that even if it does break out, you would trade higher before it collapses lower, giving you a false breakout over here. So beware of trading against the trend, whether you're trading breakouts, pullback, or or whatever entry techniques. This usually isn't really the best ideal situation to be trading. Okay, so that's one. Number two, far from structure. What does it mean, right? Look at this example. Let's say this chart, right? This is the pound Aussie 4-hour time frame. But bear in mind, right? Whatever market you're looking at, whatever time frame, the principles are essentially the same, right? Whether it's a 4-hour, the daily, the weekly, the hourly, they are the same. So just apply and learn the principles, and don't really care too much what market or time frame this is, right? But nonetheless, right, in this market, we have a very nice uptrend. And at this point in time, you see that price has traded at this point so high. And traders will look at this chart and say, oh, wow, Rainer, look how bullish this is, right? I better get long, right? Before, price trades higher without me. So you get long, right? You get long at this high over here. But what is the problem with this? By going long, let me get rid of the lines. What's the problem with going long at this high over here? Think about this. The thing is, where are you going to put your stop loss? Or should I say, where is a logical place for you to put your stop loss? Well, you're not going to put anywhere here, here, or here, right? Because there is no structure to lean against. The nearest structure that comes is this high over here, previous resistance, with a possibility of becoming support. So this level is the one that you need to lean against to place your stop loss. And of course, you don't want to be putting exactly at this level as well, because price could just come into this level and bounce higher. So chances are, you need to put your stop loss somewhere below here, right? A rough estimate. So let's do this once more. So let's say you go long over here, your stop loss is say somewhere here. From here all the way to here, this is your stop loss. So the size of your stop loss is very large, right? Compared to the magnitude of the move previously, the size of this stop loss is, very big compared to this, this recent move. So when you have a very large stop loss, what happens? You're going to get a poor risk to reward, right? Because price have to move an equal distance, which is this much. It has to move an equal distance, this much in your favor, before only attaining a one-to-one risk to reward. So you can see, right, having a large stop loss gives you a poor risk to reward. So usually, most of the time, or I would say 99% of the time, I don't really want to deal with absolutes, because there are certain times in the market where traders who can be successful, doing this kind of trading approach. But I would say, I would discourage you to trade breakouts when it's far away from structure. All right, because of the fact that you need to have a very large stop loss, and it gives you a very poor risk to reward as a result of it. Okay, so that's it. How do you identify, high probability trading breakouts, or rather, how do you trade breakouts like a pro? So these are three things to bear in mind. Number one, you want to trade with the trend. Number two, you want to trade near structure. And number three, you want to trade breakouts with build up. Let me explain. So trade with the trend is something which is, you should be familiar by now, because earlier I discouraged you from trading against the trend. So it only makes sense to be trading with the trend. So in this example, you are in an uptrend. You can see that price, has consolidated here. Then it broke higher, another consolidation here, then it broke higher. So at this point in time, it looks like maybe a flag pattern is emerging, and then you could possibly trade higher from it. So when you have a trend in your favor, right, trade the breakout in favor of the trend. You would increase the odds of your trade working out. Okay, so trade with the trend, right? That's one. Number two, trade near structure. So earlier you saw that, trading when price is very far away from structure doesn't really make much of a sense, because your stop loss is so large, you get a very poor risk to reward. And in this example, what if you're trading breakout when it's near structure? Say this is an area of resistance, then price has broke above it. So if you're looking to get long right now, where is a logical place to put your stop loss? Below this previous resistance turn support, right? So you can just put your stop loss, somewhere over here. Right, so your entry is here, stop loss is here. So from here to here is the size of your stop loss. So this is a much tighter stop loss to use compared to the earlier example you saw. So with a much tighter stop loss, it will give you a better risk to reward. right? Because price don't have to move a lot in your favor before your R multiple starts going in your favor, right? Look at this distance, right? When price move equally this much, say for example, it moves this much in your favor, you get almost a 1-to-1 risk to reward, or even slightly more than that. So it gives you a much favorable risk to reward because of the fact that your stop loss is much tighter. And why do you have a much tighter stop loss? Is because you are much closer to the structure of the markets, right? You can lean against this structure to place a logical stop loss. Compared to the earlier example, the structure is way too far away, and it doesn't really make sense to me, to be trading when in that scenario. Okay? And the last thing you want to pay attention to is, to trade breakouts with build up. So this is a question I get a lot from traders, right? Rainer, what is build up, right? So I do apologize if I didn't explain clearly, but this video would definitely, clear your doubts, right? So build up is basically, think about this, right? Let's think about congestion, right? Consolidation, right? Or a tight range. You can think of build up along this line. So in this example, you see that we have a trend going in our favor, uptrend, and this is an area of resistance, right? Then over here, we have this build up over here, right? Consolidation over here. So a lot of traders will look at this chart and say, oh, Rainer, right? Price is consolidating near resistance. I'll look to get short, right? They go short, say, for example, somewhere in the middle of the range, get their stop loss above this high over here. So that's what they'll do, right? Because at resistance, right, it makes sense to go short. But think about this. Think deeper. If price is consolidating at resistance over here, what does it tell you? You know that resistance is an area where there is, potential sellers to come, who will come in and push price lower. For example, over here, right? The sellers came in and pushed price lower. But in this example, price is consolidating at this area of resistance. Where are the sellers? Why aren't they pushing price lower? Why is that? Think about this, my friend. And the reason why the sellers are not pushing down the prices could be one of two things. The sellers are no more, right? The sellers are no longer there. That's one. Or number two, there are buyers, right? Equally strong buyers who are willing to buy at these higher prices. They're willing to bid at these higher prices. So no matter which scenario it is, whether is it number one, there's no more sellers, or number two, there is strong buyers over there, it doesn't look good for traders who are looking to short. Right? And on top of it, the cluster of stops above this high would create incentive for the smart money, for the institution to actually break out higher so they can rate these stops above this high and above this high. So when you see, so my point is this, right? When you see consolidation over here at resistance, right? Basically build up over here, this is what we call a build up. Build up just in front of area of resistance. This is a sign of strength, right? I repeat, this is a sign of strength. When you see build up at area of support and resistance, a sign of strength. So for example, this scenario, right? I'll be looking to get long when price trades above this high and get my stop loss, for example, just say somewhere here, right? 2 ATR would be fine. So this is something to look out for, right? Look through your charts, look through at, when price approach support and resistance area. Ask yourself, what happens if there is a consolidation at support and resistance area? Does it improve the odds that a breakout will succeed, right? Do this research on your own and you'll be amazed at the results that you find, right? So this is the thing to look out for. Trade breakouts with build up, and this would really improve the quality of breakout setups that you're taking. And on top of, the earlier two tips I shared with you, right? Trading with the trend and trading near structure. So let's do a recap, right? What have you learned today? You've learned, basically what is a breakout. You've learned when not to trade breakouts, right? You don't want to trade breakouts when you're trading against the trend and when it's far away from structure. You want to be trading breakouts when you're trading with the trend, when you're trading near structure, and when you're trading breakouts with build up. Okay? So let's talk a little bit more in depth about build up. So for example, when price approaches this area of resistance, this is what we call a build up. And when price approaches this area of support, this over here is what we call a build up. Okay? So I hope this video has basically, shared with you great insights on how to trade breakouts successfully. So if you have any comments, any feedback, feel free to let me know in the comment section below. With that, right, if you have enjoyed this video, feel free to hit the subscribe button below and you'll always stay updated to my latest videos. With that, I wish you all good luck and good trading. Talk to you soon.